Good afternoon and welcome to my YouTube channel. Be sure to hit that subscribe button and turn on your notifications as I bring you some of the most important levels on the overall market indicators, as I like to call them, the SP 500, the NASDAQ, and the Dow. Tap in, turn on those notifications, and share this video with someone that you know that might be interested in trading or investing. Now let's dive in. Again, no one is seeing what's going to happen in the future. However, we can anticipate some levels and a possible reaction that could set us up for either some great entries from a trade standpoint and on the overall market or a long-term investing standpoint. So all last week and basically the last month, we watched our S&P, our beloved S&P, be stuck in a range between about 39.20 and 38.04. And finally last week, it broke out of this range and continued upward on what was a better than expected CPI report, where we're seeing CPI drop year over year. I think it was 1 basis point, if I'm not mistaken. Don't quote me on that. However, we're seeing that drop. And ultimately, the market has responded because they don't believe the Fed will raise rates any higher than what possibly is already priced in at 25 basis points at the next meeting and the meeting after that. So if those things hold true, now we won't necessarily go straight up because nothing goes straight up in the market. There are ebbs and flows as we continue upward or downward. What we're about to find out is if, in fact, we're going to challenge this 4,184 level. Looking at it on a higher time frame, you'll see on a monthly chart, we had a little bit of resistance in April. It toed the line in May, wicked off of this level, opened up and climbed higher in June 2021. So that's where this level began to become an important level for the S&P 500. Then we almost see it wick down to the same price, but definitely within a range in June of 2022 as we started the decline that we've been experiencing over the last 12 months. The following month, we wicked down again, opened and then wicked down again in February 2022. Then again in March 2022, we finally broke below, but before we could go completely down, we retested this level before making another lower low. All right, so these are all the months where this 4,184 in and around this area, not an exact price. And then we came back up, hit this level again in August 2022. We touched the level again in September 2022, and then again in December 2022. So you can hear all those numbers, all those months, and how much this level has played a role in the S&P 500. When we look at the most recent candle that just closed this past week on a weekly, we can see that we have this trend line that we've dropped in here, bit of a channel that the S&P has been in from a downtrend standpoint. So it's consistently been making these lower highs, right? So here's a lower high. Here's a lower high, and then we broke even lower and made this lower high. So these points connect to make this trend line over the top. We challenged it in November, again in December, a couple of times, and we're right back at that level right now on a weekly chart if you look at it. So this downtrend that we've been in, which kind of mirrors a channel, we've been watching it to see, is this the breakout? Now we have a candle that's right at that level, and it's a strong bullish candle. Doesn't mean we're going to go straight up through this point, but it's a strong bullish candle. I've also drawn a Fibonacci retracement from the December high, December 12th, 2022, down to the December 19th low. There's also a retracement level there at the 61.8 retracement, 4,030.25 to be exact. But again, these aren't precise. I don't have my magnet on, but it gives you roughly a range. Could we open up there, possibly retrace before breaking higher? That's what we're going to be looking to see over the next few days. If there's still more bullish momentum in the market and we break out of this channel. Now, what I will tell you is this channel break, while very important to signify that we could be in a short-term uptrend, when it gets to this 4,184, that's really going to tell us what's happening, along with this level up above. where that previous high was. Those are the two levels I'm looking for. I'll put a horizontal line on so you guys can see that a little closer. It's around 43.26. So 4,184, that's level number one if we break out of this channel this week. That's one of the first things I'm going to be looking for. It's not to say that it'll just go straight there, but that's the first thing ahead that I'm looking for now that we've got a strong push off of this correction and we're challenging this trend line. So up above 4,184, down, and then ahead of that, the previous high at 43.26. So those are a couple levels up ahead that you can anticipate. Now, what's going on down below? If we look, we just about hit this 50% retracement. Again, not exact. The magnets aren't on, so it's a little off probably. But the March 2020 low all the way to the January 22 high, that is a 50% retracement that we touched back in October. If that is in fact the bottom, I'm not sure. I don't know. May not be. I've got the February 20 high as a long-term view. You will catch that in my first video of the year. That's long-term view, and then 3,180 down below. But just for the next few weeks, what could possibly be below? Well, technically, we're still in a lower low. We've been making lower lows consistently, and we haven't broken above that high that I just mentioned. So technically, we're still in a downtrend. And because we're still in this downtrend, I think it's important to see what could possibly be down below. So let's just measure it out. And I'm going to give you, we'll use our trend-based fib extension and see what could possibly be down below. We could be going back as far as 3,767, which would be a 50% extension. And then we've got the 61.8 extension at 3,669, and then a 78.6 and the one just below it. So those are some levels on the way back down. To make it even more precise, beyond the trend-based fib extension, a regular Fibonacci retracement of this move we stopped on the 50. If it stops here and wants to make a new leg lower, we could be headed to 37.58, possibly even 3,644, which would line up almost with this previous low at 3,693. So that's potentially what's to come in the near future lower, right? We could test this level again at the 50%. We could come down and get after this level at the 61.8 retracement, which is 3,758, or challenge this previous low here at the 78.6, which is right around 3,644. So those are some levels that we could see on the way back down. Okay. And I believe in those levels above us and below us, they could absolutely provide support resistance in either direction and something to pay attention to over the next week to 2 weeks. That's what we could possibly see after the CPI print that we saw. We've obviously gotten some bullish momentum off of this month-long stickiness in this range that we've been tracking since December. We've now broken out and risen above that, but we do have this channel to deal with. So let's just keep your eyes on that channel. Next, I want to show you the VIX so you can see what the VIX looks like. And if you want to just kind of measure, and again, this isn't a chart by the sense of you would want to like track higher highs and lower lows, but you can track ranges. And over the last couple of years, since, we came into the pandemic, we were coming in from roughly an 11 range, and then we shot up during the pandemic. And then this is kind of where we've been sitting since then. And I would kind of mark this range from here to here. So about 37 to 14, just shy of 14, but in the middle, about 14.61. This is the range we've sat in since we kind of normalized, if you will. And if you notice, with previous push highs on the S&P in August and in April of 2022, we've actually broken back down to just below that level. And this is a weekly chart. you can see that it came down as low as 1801 last week on the VIX. If it continues to push lower, you would expect the S&P to continue to drive higher. You would expect the S&P to continue to drive higher if we continue to see this, in fact, drop lower. So that's something to keep your eyes on, specifically to the VIX which is a volatility index for the S&P 500. Those are some areas to kind of continue to look at and understand where the S&P might be headed. And then next, I want to show you the Dow as we wrap up this video. Try to keep them short and sweet. The Dow has made two significant legs higher over the last 2 weeks. So here's one, the first week of January, and here's the other one. And broken above this high. Unlike the S&P, who hasn't broken over its August pullback, the Dow has made that pullback. I also see a little bit of a head and shoulders here at the bottom, which could be signaling a reversal. Right here, it found some support here and broke up. Go check out the mini futures for the Dow to see a little bit more in-depth look at this particular chart. And then from a Fibonacci level, what may be ahead for the Dow? It broke above the 50. We could be looking to close this gap that was created in June of 2020, right around the 61.8, which would be about 60.87 on the Dow. All right, now let's take a quick look at the Dow. One thing that I think is so interesting on the Dow futures is the trend line that we were talking about on the ES. We've actually broken out of that one, and it was prior to this most recent push high. We broke out of that trend, which was a downtrend from January 2022 to the low in October. We broke out of that right around November 7th, the week of November 7th. We broke out of that trend and then retested it at support, which was around 33,099. And then it looked like we're about to make a new high. May not happen, but we look like we're about to make a new high. So that's what's interesting to me on the Dow. If we go up to the monthly, we can see the bullish engulfing candle in in October over the month of September, and then another bullish candle to follow that. Little bit of trading sideways since, but if in fact we break above this 35,189 price, we would anticipate a new high and a new trend at that point. We'd have a push high, a correction, and a break above that to create a new high, and at that point possibly even challenge the all-time high for the Dow, which is, give or take, don't quote me, 36,800. So those are two levels long-term up ahead. In the meantime, this just challenging this area on the Dow is going to be significant coming into this week. And if it doesn't happen this week, next week, you can see the previous support and resistance around this level dating back to April 2022, as well as in January 2022, and then in August 2021. So this is going to be a big challenge area for the Dow where I might see some resistance. And of course, we could come back and test the previous support that just provided support over the course of 4 weeks. Late December into this month, we had support at 33,099. We can come back and test this level as well. And what's also down below, if we run a Fibonacci, we could say at that 38.2 retracement, maybe we come back to the 50. Maybe we need a deeper correction after we've broken above this trend. So we have this move out of the trend line. Maybe we come back even to the 50. We could even come back to the 61.8. But those are some levels that you can keep your eye on above us, right at the all-time, or not the all-time high, excuse me, the December 22 high that has some previous support and resistance at 35,264. And then just below us, the support that we just left at 33,099. Then the 50% retracement at 31,965. And then the 61.8 retracement on the Fibonacci at 31,084. So that's what's happening on the Dow. Let's take a quick look at the NASDAQ. You can see a level that I've had my eye on since this support was found back in May 21. It provided us some support in March 2022, some resistance in May 2022, and then again a little resistance in September of 2022. So this level, somewhere between 12,957 and 12,843, would be a level into the future, as well as this previous high, which is sitting roughly around, let's get that horizontal line, roughly around 13,712. So those are a couple levels ahead, right? And then I would also characterize this previous push high that we might see a challenge there. So there's 3 levels that you can get into. This one's more of a range, but I'll put an exact number just so you can have it for your record to pay attention to. So 12,357, 12,895, 13,712 are all levels ahead of us. This is a weekly chart that we should be paying attention to. Now, what are we doing in the immediate past? Well, we're absolutely making higher lows. We've put in 3 higher lows from this most recent. And we've also put in higher highs. We continue to print higher highs on this one. Even though this is a pretty steep correction, almost came back to this point, but didn't, we could possibly see a continuation back up to that 12,357 based upon that. Now, with that being said, we still have to look below. We absolutely have to look below to see what could possibly happen, because the broader picture is looking at this drop that we've made since January, really since November. We've consistently made lower lows and lower highs, including this one that was put in October. And since this one we put in October, it has not come back to this 13,712 that we have marked. So we're technically from January to now, January of 2022 to now, we are absolutely still in a lower low until either this 13,712 gets broken or this October low, roughly around 10,500, gets broken. So until those two things happen, and I'll box those in instead of drawing these levels, until those things happen, we are still technically over the last year in a lower low. So if that's the case, where might we land below that? And first, just by taking a look at support and resistance, we can easily chart the pre-pandemic high, which was right around 97.80. Not exact, but get you a close idea. You can go chart this on your own. That's an opportunity for us to deal with. And then from a support and resistance standpoint, I can also look in this range from here to here as possibly providing long-term support if price were to break lower. So this range, roughly about 10.313, 10.137, as well as 9.780. Really longer projection, but you have some levels kind of high up above us and then low below us. So maybe a month, 2 months, could be even longer if we trade sideways. And then just to take a look at what we have to deal with over the next week or two, if we zoom in, we're pushing higher. So again, this is the level that I'm looking at. This area could provide resistance where we currently are and cause us to drop lower as well. So if we run a fib, you can see we just broke above the 50. So maybe 11,732 at the 61.8 retracement. And you can see some previous support and resistance at that level that could provide some resistance and cause us to trade lower. We can go all the way back to the 786, where you can see some previous resistance and some support at 11,996. So those are two levels above. And then I'm going to use the trend-based fib extension to see what could possibly happen. We've already had a touch on this one at the 61.8 coming back right here. Maybe 10,397, which is just below the low of October, could also provide some resistance. Some support for the NASDAQ on the way down over the next week, 2 weeks, 3 weeks, if we don't trade sideways. So there you have it. You've got some levels above you and below you for the SP 500, the Dow, and the NASDAQ. Remember, these are just my levels and should not be taken as trading advice. They're just my opinion and something that I want to share with you. Be sure to like and subscribe and share this video with other people and turn on your notifications, because I will be providing updates by way of shorts, YouTube shorts, over the week, throughout the week, so that you can know how these levels are playing out this week and into the future. And I'll see you next week.